Chuck, thank you very much for joining us. Excited to have you on the event, and I'd love to learn more about what you've been up to, your platform, but also some insights you can share about what you're seeing in terms of trends and what's working for real estate investors who are scaling up more successfully than others. And to start with, if you wouldn't mind saying a little bit about yourself and your company.
Yeah, great to be here, KP, and be a part of the LendingOne event here. My name is Chuck Hattemer. I'm the co-founder and CMO of Onerent. Onerent is a residential property management company, a tech-enabled service for homeowners and renters to cover the whole life cycle of leasing, renting, and maintaining property. We do that for about 2,000 doors across the West Coast of the United States in 7 different major metro markets. And our model allows property owners to invest in and manage property across a wide set of geographies without having to deal with tons of different local property managers that they need to coordinate with. So it's sort of a one-stop shop for all their real estate needs when it comes to managing their rental.
And that's pretty cool. We had talked about it before separately, and I thought that's a great value add, I guess for 2 reasons. One is the headache, and 2 is the cost. Because of your scale, you can probably, that probably translates into some cost advantages that you can, give to your investors, real estate investors. But also, if I have to invest in, if I want to invest in a property in Charlotte and another one in Texas, I don't have the headache of trying to find a new management company, and I can have the same service. I know what to expect, one platform, all that.
Exactly. And what we're really trying to build is a way that you can manage your real estate investments just like you manage your stocks on Robinhood or something like that, right? There's not really a de facto standard for rental management. There's over 80,000 property managers in the US. It's very fragmented. And it's the biggest barrier to really scaling your real estate portfolio is you need all these boots on the ground. And so we're bringing technology into the mix to really automate and scale property management workflows so that an individual investor can get sort of the scale benefits of a large real estate operator.
So can we switch now, and maybe from your experience, if you can share, I guess 2 main things I wanted to ask you. One is any trends you're seeing around real estate investing for rentals, and 2, what separates the more successful rental real estate investors on your platform versus the other ones who may not be as successful or perhaps aggressive with growth. So for trends specifically, are you noticing anything geographically or in terms of asset class, product?
Yeah, one of the biggest growing trends is the growth of single family rentals as an asset class, or SFR as people call it. And SFR is an interesting asset class because it's very, it's not standardized, right? You have all these different forms of properties and quality and types of properties, and it's heavily fragmented and owned by millions of independent landlords. Out of the 48 million rentals in the US, about 17 million or 35% are single family rentals, and 74% of these are owned by individuals. So it's almost a one-to-one relationship. So what we see is that because technology has gotten to the point that now you can sort of standardize a non-standard asset like single family rentals by using technology, for example, to create digital twins of every property, a 3D image scan, and be able to, identify common traits between properties. This sort of technology that's now coming into the offline world is helping unlock this asset class, and it's in high demand because there's millions of people and population that is growing with the older millennials that are searching for single family rentals because they're starting to have kids, they're starting to create families, but they're renting longer. So one of the big trends we see is a high demand for single family rentals, and a pivotal moment where technology is now allowing people to invest and manage in single family rentals at scale. So I think that's one of the biggest trends in the asset class. And then we also see, one of the big trends is just in terms of a generational shift in real estate. Today, the largest share of today's home buyers are millennials, and 99% of people are finding their properties online. And it's like over 50% are finding it on their phone. And so people are already searching for real estate online. And the next big trend that's going to happen, because this is a digitally native generation, is people are going to buy and sell real estate online. So we predict that, there's going to be sort of this Amazon of real estate that is created because people want that digitally native experience, and they're more comfortable now than ever before in conducting large, sensitive transactions online. So I would say those are probably the two biggest trends: SFR, real estate, and the generational shift in rentals, or in real estate as a whole.
Do you see real estate as an asset class, SFR, is becoming more like trading stocks, where you can have your post where this is the ROI I'm getting, or this is the cap rate, these are some other parameters, and people just trade them for partial ownership or full ownership, and you just have more liquidity that way?
Yeah, definitely. There's a growing trend around fractional ownership, and we've seen this in the stock market, and people are now starting to apply that logic to real estate, in the sense that the cost of real estate, the home prices, are at all-time highs right now, and there's been sort of a separation between the growth rate of housing prices and income. Income is not going up as fast as housing prices. So that creates a big financial burden for people on their path towards homeownership. And because of that, there's a lot of alternative ways to finance new home purchases, or take fractional ownership in property and build up your equity over time. Perhaps if there's a company, one of my friends, a guy named Ryan Frazier, is building a company called Arrived Homes. And Arrived Homes is a platform that allows the residents that are living in the portfolio of rental properties to actually have a fractional ownership in the properties that they're living in. And it's sort of a hybrid between a REIT structure and sort of traditional home financing and equity lending. So there's a definitely growing trend that is being pushed by this financial burden that's been created for the next generation of homeowners. And people are exploring different ways to deliver that ownership. And
just to switch to what you're seeing from your portfolio of real estate investors, are you noticing anything that separates the ones that are more successful than others? Are they focused on a specific geography, specific type of properties, or they're sourcing differently? What do you think is the differentiation there?
Yeah, I think, real estate is a very complex business and transaction. And I'm sure there's many different parts of buying a property and managing it. So we find that the most successful real estate investors are those that really specialize on what they're good at, which is deploying capital, identifying the next deals and opportunities. And some of the strategies that I found the most successful real estate investors include: one, identifying properties that are sort of the lowest quality property on the nicest block. And this is a common strategy, but it really works well with real estate investing because, especially if you're investing in a low yield market or a low cap rate market and you're looking for appreciation, if you can find, the crappiest home on the block, so to speak, but that block is also the nicest in the city, then real estate investors tend to have access to contractors and labor that can help them renovate and fix up that property. And then they can get massive appreciation on that asset because it's in such a great location. One of the top strategies that real estate investment trusts use, or REITs, is also looking at school districts. And that seems pretty straightforward, but you'd be surprised to know that that is probably the single largest driving factor of a real estate investment trust when they're evaluating properties to purchase. They're looking almost solely at school districts. and especially in single family rental, because the types of renters that are moving into these properties are those that have kids that want to be around good schools, and that protects the home value and the rental value that you're going to get from it. The third strategy I've seen successful investors use is identifying properties that are in some kind of litigation or have some sort of liens on the property. Because if you're confident enough with a well-prepared property management partner or legal partner that can work with you to resolve the litigation issue, then oftentimes the seller will give a discount because they don't want to deal with the headache of the litigation or the problem at the property, whether it be, maybe there's some construction that's not permitted, or maybe there's a lien on the property, or a problematic tenant. And if you have the right partners to be able to deal with those things, you can get steep discounts on the purchase price. And then of course you're going to have some extra work on the back end of the sale of the purchase. But if you're well prepared and you're working with partners on many deals, you're going to get really good rates on resolving that problem. So those are three strategies that we see successful investors implementing that differentiates them: finding partners, getting the crappiest property on the block and fixing it up, school districts, and then identifying properties in litigation.
And given what Onerent does, it helps, I guess it increases the mobility of a real estate investor to look at different markets in some ways. Have you noticed that the successful investors, they seem to saturate their market pretty fast and they try to spread out from there? Or do they go to a completely different market? And does it matter if you don't have direct boots on the ground experience in a different market, or can you still be successful?
It really comes down to what you want to get out of real estate investing. If you're an investor that is looking for just passive, income and cash flow, then, oftentimes we see these investors are investing, in one kind of theme of geography, maybe cap rates that are anywhere, 5 to 7 to 10% cap rates. So these are going to be sort of tertiary markets that may not be on the coast, but they're high yield and they're relatively stable in terms of employment and income. And so these markets, they offer high cap rates. So you look at markets like, for example, Cleveland or Columbus, or even markets in Texas, like Houston. So these are going to be good cash flow markets. And then you have appreciation markets. So if your goal is you want to sit on this property long term, capture the appreciation, and you have enough capital to buy in maybe some more primary markets, then you're looking at 3 to 5% cap rates, and that's going to be markets like the San Francisco Bay Area, Seattle, Austin, Texas. So really hot zones that are almost guaranteed, good appreciation on the value. So most investors we see are mixing it up between those different types of markets. Others will go all in on just cash flow or all in on just appreciation. So it really depends on the financial goals of those investors.
Okay, great. And for people who want to connect with you and maybe learn more from your insights, where do they follow what you guys are doing up on Onerent, or just personally?
Yeah, check us out on Onerent. That's Onerent.co. Come connect with me on LinkedIn, Chuck Hattemer on LinkedIn. And we just launched a new newsletter all about prop tech called the Prop Tech Monitor. So if you search that up, we're on Substack, proptechmonitor.substack.com. And that's where you'll be able to learn about the latest news in residential real estate and technology. And yeah, looking forward to connect with anyone in the audience.
Awesome. Thank you very much for sharing these insights.
Great. Thanks so much, KP.